All right, so let's talk about liquidity. Let me share my screen. Let's talk about liquidity, okay? So we're going to talk about buy side, sell side, external, internal, all right? So we've got a lot of things to cover, but this is one of the most important parts of trading. To understand how the market moves, you need to understand liquidity. You need to understand why price targets these levels and how we form our daily bias or our internal bias or our intraday bias based off of these levels. Okay, what we're going to do is we're going to start out on a weekly time frame. Okay, we're going to see what we've been doing on a weekly time frame. What has price been doing? Okay, so if we look back at these highs right here, this is what's called an external draw on liquidity. Okay, so this is what's called an external draw. Get rid of that real quick. So external liquidity right here. All right. So up top, this is our external liquidity. Why is it external? Well, because when we look at external, that's going to be our higher time frame ranges. And what's a range? It's a swing high to a swing low. Okay, so here on the external side on a weekly, this is our swing high up here. Down here is our swing low. Okay, so we see our external range on a weekly time frame is from this swing low to this swing high up top. Okay, so now we would be expecting, once price is moving back down, we'd be expecting one of these liquidity levels to be taken out or to be targeted, right? And when I use this little dollar sign thing like that, that indicates liquidity, okay? So we'll put external liquidity down here. If I can spell, there we go. External liquidity down here, up here. So on a weekly time frame, this is the liquidity levels we're looking at. Okay, so when we look here, there's a lot of other factors that go into it once we start breaking the charts down. But if we were long biased overall, well, then we would be expecting after a retracement move for price to eventually come target that external liquidity again. Okay, and we can see now we have more external liquidity down here, right? So this is another swing low formed on a weekly time frame. So now this is considered an external liquidity level that price could target in the future. Let's say that we are short bias. Let's say the market wanted to reverse and come down here. That would be that next draw on a weekly time frame that price would be looking to target. Okay, so this was that buy side external liquidity right here at these highs. Okay, so when we're getting this retracement, and if we expect the market to push back for the longs, this is that level that we're looking to target. Let's say you were swing trading, you wanted to hold, let's say you wanted to hold the longs all the way from down here, and if you wanted to swing and you wanted to see price continue in the longs, this would be that target that you're looking to now sell that position that you were in a long-term trade in, right? Because you bought down here and you want to sell once that liquidity is taken out. That's what you would expect, okay? So then we could go down to a daily time frame and find some more external liquidity, okay? It's still external. We can see the swing low down here on the daily time frame, and now we're forming a swing high up here on a daily time frame. Okay, we had the swing high up here. We have our swing low down here, right? So all of these levels, that's our external liquidity. So a daily, a weekly, a 4-hour, those are all our external liquidity levels. So our buy side and our sell side. Remember, up top is our buy side and down low is our sell side. So these are sell side liquidity levels down here at these swing lows. And up here, these are our buy side liquidity levels at the swing highs. Okay, so we can see on a weekly or on a daily time frame, we have these targets that price is looking to go take out. Okay, we see like little swing low here, right? So that could have been, that's a sell side liquidity level as well. And look how price targeted that level right here. Notice how we come down and we sweep that low external. And what do we do after we sweep an external low? We go right back up to our external high. Okay, so the market is always moving to take out external liquidity levels on a higher time frame. So then what we have to do is we have to start going down into a smaller time frame and figuring out what's our internal draw on liquidity, what's our intraday bias, right? And that's gonna most of the time align with our external draw on liquidity. So we go down to a 4-hour. I'm still looking for the 4-hour as external levels because this is still a higher time frame. So now I'm looking at these lows and highs still as external. So we can see here, look at this right here. That's an external draw on liquidity. That's a swing low, and we see two swing lows. So this is my next point that I really want to harp on. I want you guys to understand what this means. When we see a swing low, especially an external swing low like this one, and then we see price come down and test that level but create a relative or equal low, that means we are generating a stronger level of liquidity down here. Okay, what does that mean? Now price is more likely to come down and target this level because now we have stop losses, we have limit orders, we've got all of this liquidity, right? Stop losses and limit orders are all forms of liquidity, and you're going to hear me say liquidity like a million times today because it's so important. Those orders are what price is targeting. Okay, why is it targeting those orders? Because that's money. That's where the money's at. So when we talk about an algorithm or market makers, they're targeting this liquidity. Okay, they're targeting grabbing people's orders, taking their money, and reversing the position. Okay, so now when we see equal lows down here, right? We see these equal lows. We're now expecting this to be a stronger draw on liquidity. We expect price to eventually try to come back down and sweep these lows. Okay, so every time we see relative to equal lows or highs, we're expecting price to eventually go revisit that area and try to go sweep those lows, right? So I would expect price to come back down and try to sweep these lows at some point. Okay, another reason for that is because look where those equal lows are. They're right going into a bullish weekly fair value gap right here. Okay, so we have that external liquidity, equal lows. We have a bullish weekly fair value gap, which just means it's another target for price to go test. Okay, so that's why I would expect us to come back down and try to sweep. Now, I wouldn't expect it to be necessarily maybe on this 4-hour candle, but maybe on that next 4-hour candle, we're going to see us come down and try to take out those lows. Okay, we go down to an hourly. We're just looking at all these swing highs, swing lows. Okay, so these would be draws on liquidity. See the swing high up here, right? And we already have that swing low down here. This was a draw on liquidity. We had a swing low here, and we've taken that liquidity, right? This was one of the levels that I had charted out down here. We swept it, and now look what we're doing. We reverse back up, rebalance the market a little bit, come back up into a premium, and now I would expect price to come back down and target these equal lows. Okay, so you're looking at the 1 hour, the 4-hour, the daily, the weekly. Those are our higher time frames. Those are the external draws on liquidity that we're looking for price to target either on a daily, maybe it's in one, on today we expect us to go take out a 4-hour draw on liquidity. Maybe within this next week, we expect us to go take out that weekly draw on liquidity. So you're breaking it down by time frame. That way you now have formed your daily bias. Like this morning, my daily bias was bearish. Remember, I came into the market and I said, I want to see the shorts come in. I want to see us be bearish today to go take out our sell side liquidity. Remember, this is sell side liquidity down here. So this was that main target I talked about. I wanted to see us eventually take out. This was last week's low, strong target for price to go take out. But now we've seen us create that equal low. So on that next 4-hour candle, I would expect us to come back down and try to sweep that low. Okay, that's what my expectation would be. So the 1 hour, the 4-hour, the daily, and the weekly, those are our external levels that we have to be looking at all of these swing highs, all of these swing lows. Okay, notice how right here we have a swing low. What does price do? It comes down and sweeps the swing low. Okay, and now we have liquidity up here. We have a swing high. Okay, so when price revisits this level, we would be expecting us to come sweep that swing high, right? So we're just, all the market does is it bounces from these levels. It goes, it takes out buy side, it takes out sell side. And when we can figure out what the market is going to do on a weekly time frame or on a monthly time frame, on a daily time frame, we can start really figuring out what levels price is really trying to target. If we think price is going to be bullish, say tomorrow we think price is going to be bullish, well, what's that target? This is one main target we would expect price to take out at this high. Okay, what's another target? Probably up at this swing high up here. Okay, so these are those targets you have to start thinking about. And every morning when I come in and I do my charting in the morning, these are the levels that I'm looking at. That's when you hear me say, guys, I want to see price go take out this level today. This is what I expect. That's why my bias is short. That's why my bias is long. I think we're going to go take out that level. Okay, and sometimes I'm wrong. Sometimes price is different. It doesn't do that. But when we can figure out that daily bias, we can see why price is moving one way or the other. It's because of this. This is exactly what I'm doing. I'm finding these liquidity levels. Okay, I'm finding where price is going to draw to next. Why is it going to draw to that level? And then what we can do is we can go down now to a 15-minute time frame or even a 30-minute, and now we start looking for those internal levels. Okay, so the white lines are going to be those external levels. This one already got swept. So these are our two external levels right now, the closest external levels that we're looking at. So they're in white. Okay, so on a 15-minute, we don't really have many internal levels that we're looking at. We don't have many internal levels that we're looking at. So on the 15-minute, I don't see too much. I see some fair value gaps. I see things like that, but we don't have a lot of swing highs or swing lows. Earlier, we did. Look at all these internal levels here. Okay, so we had all of these equal lows right here. Okay, so I'm going to do internal liquidity in blue. Look at all those lows we took out. Okay, we had more internal liquidity down here, sell side. Look how we took out that level. I'm going to I'm just going to say IL for internal liquidity, right? This is IL for internal liquidity. So we were short biased on the day. So these are those levels that we're looking to short to. We're looking to take profit once we sweep these levels. Okay, and then here's that level down here. Boom. Look how we took out that level. I think that was an external draw on liquidity, so EL, external liquidity. So look at how we come down. We sweep these lows, we sweep these lows, we sweep these lows, right? So on a 15-minute time frame, we can see that we did have internal draws throughout this whole external range. Okay, so this low to this high, that was that external range. So this was our external draw on liquidity here that we took out. We had one more external draw on liquidity below that we have not taken out. But we can see if we formed that bearish bias, we then looked for liquidity levels on the sell side, right? So sell side liquidity, and so far we've seen price take them out. Now, today I didn't get the entries I wanted, but we still had the right analysis overall, right? We saw that the shorts were going to come in. We just didn't get our entries. But we still had those levels on the internal side. We can also go down to a 5-minute and see if there's any more liquidity levels that we formed. Okay, not too many other ones on the sell side. We see them matching up with the 15-minute. Okay, they're pretty much matching up. We could even go down to a 1-minute and see if there's more levels of liquidity that price might be targeting. Okay, so obviously there's a lot more on the 1-minute. We see all these little swing lows, swing low, swing low. I don't pay attention to liquidity on the 1-minute as much. I pay attention mainly on the 15 and the 5-minute for our internal liquidity. Those are the best time frames to see those true swing highs and true swing lows. Okay, so now if we're looking at the buy side, we're starting to look at this swing high up here. Right, up here would be a buy side liquidity level. Right, so we'll just say buy side liquidity. Okay, because that's a swing high. That next level would be up here. Right, that's buy side liquidity up there. And then obviously that external liquidity level at these highs. So this is what I'm doing all the time. I'm breaking down what levels price is trying to target. And do we notice how every time, not every time, but a lot of the time when we take out those internal or external levels, we see retracement in the market. So we came down and we swept this low down here. Notice how we retraced all the way back up and then we drop again. Okay, now we take out this level and then we retrace all the way back up. Okay, so that next level I'd be looking for price to take out, if price is going to continue bearish, would be now these lows down here to complete that external draw on liquidity. That's that full target on the day, right? I would be trying to short from here all the way down to those lows. Okay, so that's how I look at liquidity. That's what I do every single day. That's how I have come to the understanding of why the market moves the way it does, how the market moves, because this is the key right here. This is the key. when you can get a good understanding of this stuff, your mind is going to open up and you're going to see so much more in this market than just fair value gaps or order blocks. Okay, those are other levels of liquidity we're looking at in terms of internal, but the highs and the lows are the key. That's why you see me setting my take profit levels at the highs and the lows. Okay, and typically I would like to keep my stop a little bit above the highs, or we just, because let's say we come up and sweep this liquidity, maybe I'd want to keep my stop a little bit higher, or maybe I'd want to wait for us to come up and grab that level and then get an entry in the shorts. Okay, so it's things like that, but I'm always looking to take my profit at these levels. So once we sweep, I'm selling. Once we sweep, I'm selling. Okay, because those are always the points that we've talked about. Look how every time we've swept, we see price retrace. Okay, so that's what I'm looking at. That's what liquidity is to me. That's the way I have interpreted it. And once I started to realize this and I started to implement this into my strategy, everything changed because now I can actually open my charts in the morning and I can see where price is most likely going to target. And from there, I'm good. Okay, so it starts with the higher time frame. Find that weekly bias, that daily bias. Find those swing highs, those swing lows, those external levels like we talked about, right? These external levels on the white lines, right? These lows, this low, all of these external levels, the highs up here. And then we're going to break it down to 1 hour, these highs, these lows. And then we go down to our internal level to find on a 15 and a 5-minute time frame our internal highs and lows that we're targeting throughout this whole range. Okay, so that's the way that I look at liquidity.